Will China's property plonker, the misnamed Evergrande, bring the markets down? Is it getting time to get greedy when others are fearful about BHP and its share price? And can we believe the OECD when it says that 2022 will be an economic party time? I'm Peter Switzer, he's Paul Rickard, and we're mad about money. Well, Paul, Evergrande, is this going to bring markets down?
Not sure, Peter. The interesting thing is that none of us had ever heard of Evergrande until a couple of days ago. I think it's one of those things that people just look for as a reason when markets get a bit nervy. I think this is in a different league to everything else, but no doubt it's causing problems in Asia, it's causing problems in the Hong Kong market. How they deal with it, who knows? But I don't think there's any data to say that we're looking at global contagion. It's not another Lehman Brothers, but the US market, it's September. It's had a month after month of solid run up, and it's not surprising that a few nerves creep in. I mean, we've been saying that now for some weeks, Peter. We expected a correction. I think Evergrande, if it's been given as the reason for the correction, is just the excuse.
Yeah, and I think the interesting link is that Evergrande is the second biggest property developer in China. They make, did I hear that there's like 1.2 million apartments they're supposed to be building, which only in China can they be doing stuff like that. But you can see why iron ore prices are coming off the boil. They must be an enormous consumer of steel to make so many apartments. And I guess if the whole property sector goes into a decline, it will have an impact on the demand for iron ore via steel.
Yeah, I mean, look, there's a point there, Peter. I mean, it's got, I think, something like $300 billion of debt, but who knows where that is? It's so opaque, the market over there, and it's China, remember. So look, I'm sure. Look, there might be some pain for investors in Evergrande. There has been. There's going to be pain for people who've lent them money. There's probably going to be this bit of short-term pain in the Chinese economy, but whether that really has an impact on us, I'm sort of doubting that, Peter. So I'm not in the Evergrande camp as being the reason, but look, let's just call it as something. It's just another factor out there, and it was time for our markets to pull back, Peter. I think that's probably the major point.
Yeah, I wrote a piece about 2 weeks ago pointing out 8 reasons why the market would sell off. Didn't have Evergrande in there, so now I've got 9, and it all, as you say, September and October, often very dodgy months, but due to the market tends to rebound November, December, so let's keep our fingers crossed that actually happens. Paul, let's move to the next interesting one. BHP share price, Rio and Fortescue all come off the boil. It was come off the boil even before Evergrande. Evergrande's problems became public. Do you think there's going to be a buying opportunity for BHP, and when do you think that might be?
Look, I think it's not too far away, Peter, because, look, we've seen the iron ore price come off from something like about $230 to around about $100. Depends which market you're looking at. People are getting excited. They look at the Singapore spot market. It's trading 100 contracts a day or something, right? It is pretty tiny, right? I mean, to sort of say that that's the price. I think the only people who really know are the Chinese steel buyers and Australia's big producers to where the market really is. But it's somewhere, it's halved in price. Now, I don't really understand how it got to $230 an ounce, a tonne, but it's now back at around about that $100 mark. And clearly, the Chinese government wants it lower. It's doing a lot in terms of, signalling to the world it's going to be a green economy going forward, right? I mean, it's got to do a lot for ahead of the talks in Scotland. So, look, it got too high, got too low. Is this sort of about the level where a lot of the analysts see it is? I think this is getting towards the level of where they thought the price would be long term. BHP back in sort of the high 30s. This lady looked pretty attractive. I think if you're worried about iron ore, I think there's more reason to look at BHP than there is Fortescue. Or Rio for that matter. Fortescue particularly because it's got lower grade ore, and so if it is going to be pressure on the market in terms of decarbonisation, it's going to suit the higher grade ore that BHP produces. Plus, it's better diversified. So maybe in the 30s, I think in the high 30s, it's attractive. I don't necessarily think you're going to get a huge rebound straight away, but I think over the long term, it could be some pretty good buying here.
Yeah, I agree with you, Paul. I think there's going to be a buying opportunity for BHP. If I thought that 2022 wasn't going to be a good economic year, I may well be a little bit more hesitant, but I do think there's going to be a big boom in 2022. And that's our next story. The OECD, and you can trust them, they never get it wrong. They're tipping a really big economic year for 2022. But I must admit, I think they're being a bit on the conservative side, tipping 3.3% for Australia. I think it's going to be 4% plus without a doubt.
Well, I think, Peter, we might even be saying the OECD is almost could be right, which would be a bit of a fluke, because they really, every time you mention the OECD, I sort of go to sleep, because their track record is pretty ordinary. But look, just what we're seeing in our business and a few others, Peter, there's a lot of demand out there, a lot of retailers getting ready for a booming, November, December, January, as people come back. I think we're going to have a huge rebound, and I'm not sure we're ready yet to, we won't be allowed to travel too much overseas, so the money's going to stay locally, Peter. I'm with you. I think 2022 could be a real boomer for the economy.
Yeah, I think there's a whole lot of people, Paul, who are desperate to get back to their normal lifestyle of going out to dinner on Friday and Saturday night, go browsing, shopping on the weekend, have weekends away, like, using Airbnb and all that sort of stuff. I think all that's going to really, there's going to be so much pent-up demand. A lot of that's going to really rebound in 2022 and create a great time. And I was actually staggered last week when I was doing the Switzer report on Saturday mornings. I always look at what I like and what I don't like. And what surprised me more than anything, that the Westpac Melbourne Institute monthly checking of the consumer sentiment actually rose 2% in September. I don't know how consumer confidence can rise 2% when Victoria and New South Wales are locked down. And the ANZ weekly one was up 3.1%, the most in 22 weeks, an 8-week high. And it's just, staggering that Sydney's confidence levels was up 10.6%. So vaccinations, the thought of getting out of lockdown must be having a real impact on consumers. But when it really comes through the door that we are free, I'm sure the kind of demand that comes out and the growth that we get will mean that 2022 will be a party year for Australia and the economy.
I mean, here are two other factors to throw in. I thought that the jobs report, Peter, forget the unemployment data, but the number of hours worked in August was only down 3.7% on the month before, which, given our two major states are in lockdown, I thought was actually pretty good. But secondly, another factor people forget about is, at least in the East Coast, I mean, the rural economy is absolutely booming. They have gone through a fantastic spring. They're all going to be record production in terms of grain and a whole lot of other crops if they can get the labour, and that's going to provide tremendous support to the economy as well. I mean, they haven't got the issues around labour, but we know that when the rural economy booms, that also provides a lot of support overall to what's going on. So no droughts, no bushfires. This is a booming spring coming up. So I'm with you. I think we're heading for a pretty big 2022.
Yeah, and by the way, just imagine how difficult it would have been if there was no internet, there was no online ordering. Imagine the severity of that economic downturn. The fact that we've had that technological breakthrough of the internet and online purchasing and all that, the fulfillment that goes with it, has really in many ways been like a cushioner, hasn't it? It's cushioned the economy. And boy, we've been lucky that technology's come down the pike before this terrible pandemic has hit the world.
Yep, I think you're right there, Peter. So let's move on. And we were looking for, we're in the sort of the release fever, I guess. What do they call that? Yeah, it's going to be a strong year for the Aussie economy. And that should be good for the share market in due course.
Yeah, my recommendation is buy your champagne before everybody else is trying to do that as well for New Year's Eve. I'm Peter Switzer. He's Paul Ricardo. We're mad about money.